Happy Cinco de Mayo, everybody. All right, last week we have some news updates for you. And so I'm going to give you those updates, but I'm also going to paint a picture for you. Some short term meaning of that news, midterm, and then what it means in the long term. So, what's the news? Well, the kind of big one that came out was GDP came in at at a negative rate, which means that GDP shrank in the last quarter. Now, if you've been watching our videos, Greg and I are like, yeah, duh. But the analysts were expecting it to go up. So then you got to dissect why did it go down? And there's a lot of factors in it, but one of those factors is reduced government spending. Government spending goes into those GDP numbers, and if you've turned on the news at all, whether you're in favor of it or opposed to it, all over the news is the cuts that are happening through Doge. That's real money that goes into the economy, and we've been talking about that will have an impact. Well, and then there's other things like imports shrink GDP. So when a country is importing goods, that has a negative impact on GDP. And again, if you've watched the news, you've seen that the U.S. has been importing a lot of goods, trying to get ahead of the tariff impact that was coming. All right, what does this mean? Well, if you have 2 quarters of negative GDP, that's officially a recession. Now, we're overdue for a recession, and recessions are okay. They're a natural part of the economic cycle. What you don't want is a massive recession. And unfortunately, based on yield curve data and a lot of other indicators, we're probably overdue for a big recession sooner or later. Now, here's the question midterm is that going to happen? Is that the start of it right now? Or is this just kind of a shot across the bow and really the recession is coming down the road? We don't know. We'll have to see. Part of it also comes down to government reporting. You never know exactly what the government's going to report. And then remember, in the last 4 years, there was a lot of government revisions after official reports. And so we never knew what the data was. Okay, here's another piece of news is the slowdown of trade between China and the US. That's based on these tariffs, right? Uh, the trade war has begun. And so Chinese exports to the US are starting to slow down. Here's my concern with that. It's not so much the inflationary impact that that'll have on us. It's more of, will there be a shortage of goods? So much of what we get is from China, even if it's just the packaging that comes from China. So when you go to the grocery store, will there start to be certain things, or Target or Walmart, fewer things on the shelves? If there's any kind of an emergency, like we saw during COVID, it's the supply chains that we realized how vulnerable we were, and those haven't been fixed yet. So now that we've got these shipping slowdowns from China, there's my middle time frame concern is supply chain crisis. If there was a supply chain crisis because of any other big event, war, like Greg was talking about, and it doesn't even have to be war that the U.S. is involved in necessarily, but if China is involved in a war and there's a slowdown in goods, the supply chain could really impact Americans. Okay, long term. Here's the big picture, and this is really what Greg and I are looking at is what does this mean long term, especially in terms of our investments? Well, the wheels have been set in motion now. Take the noise of all these tariffs out. What has been revealed to the world is that the United States trade deficit is too off balance. We can't keep running. A nation can't keep running at a deficit at the rate we're running at indefinitely. Our debt deficit has grown to a scary point. That has to change. This current administration says it's going to change it. But here's the thing, the rest of the world has seen, regardless of the administration, whether it's this administration or the next, something has to change. And if it doesn't, the U.S. can't sustain its leadership position, which means that the leadership position would go somewhere else. The rest of these countries have to know who that leader is going to be. Is it going to be the United States? Will it be somebody else? Because they need to set up those trading relationships. So the wheels have been set in motion for a restructuring. We don't know what that's going to look like. Whether that's just going to be the United States kind of restructuring itself, or if other nations are going to be restructuring. We're already seeing other nations restructure their own trade agreements. We've talked about BRICS before, and that's going underway at a quicker pace now. BRICS is the Brazil, Russia, India, China, South Africa group, and it includes about 24 more countries. So that's the big term. Now, again, if you're invested in hard assets, if there's a supply chain crisis, well, that hurts our wallets at the grocery store. But if you are invested in those, prices go up. So it's a good hedge for that. Precious metals, that's really the one that you see money moving into, whether it's central banks or even mom and pops who are saying, you know what, I don't trust what's going on right now. We're going to transfer our dollars or euros or yen and turn it into gold, because gold doesn't rust. It doesn't deteriorate. It just collects dust and it's there when I need it to be there. So that's good news for us as investors. Meanwhile, we keep watching the news and we'll keep you posted. All right, if you like this video, give us a Cinco de Mayo thumbs up and see you next week. Bye-bye.